So they're
Really?
researching how, you smell and taste citrus products.
Whoa.
Yeah. It's
Global Citrus Innovation Center,
Yep.
Lakeland, Florida.
So they're a $10+ billion company that is in pretty much every single one of the products that you think of in a day-to-day basis, providing citrus flavors to them.
How interesting is that? Very appropriate for it to be,
In Lakeland,
I guess,
right?
headquartered here in Florida.
Yep. So what's really cool about their program is that what they're looking at doing is creating a partnership with Florida Poly, and that partnership is recruiting students, because it's you don't really just wake up one day and say, I want to make a living in researching the smell of citrus, right?
Yeah.
You need to have a particular skill set in terms of we talked a little bit about what you do in university, and it's like math. Like, okay, well, you need to be really good at math, but then you also need to have a phenomenal nose. And so where you're going to find people with phenomenal noses that are good at math, they might want to research how to put things together. So they co-located next to an engineering school. So like, okay, these people are going to be good at math. And then they want to cross-pollinate with a university to be able to, essentially groom and train the next generation of scientists in this field. And flavorists and perfumers, I guess technically what they're doing.
So you could be the best, the brightest student. You could be studying some sort of science. You could have an incredible mind, but your sense of smell sucks. And you will not be hired at this place.
Correct.
Interesting. Is there any other science? I can't think of any other science that would require some sort of sense to be fully developed.
I mean, what's cool about it is you have a global corporation. I think there's 2 or 3 players in the world that do this stuff and at their level, and they're choosing Lakeland because of the long-term bet in Florida. And so how we structured that deal was super cool. It was a ground lease with a university system that had agreements with the university system. And then we capitalized the deal for them. So it was a super unusual structure.
Are we live? We're rolling. Okay. And I want to highlight too Ryan Companies and what you guys do. It sounds like you do a lot of different things. It's not just development. I mean, you have on here for this IFF Global Citrus Innovation Center. Development, architecture, interior design, construction, real estate management, capital markets. So you're raising money for them. You're acquiring the land. You're helping them evaluate the project.
All of it. So I would describe our company as a company that does from the time you dream of it to the time that you decide you want to do something else with that land. That is kind of our scope. And then we will look at it from the standpoint of, how to capitalize it, doing the development due diligence on it. And we can capitalize it in a whole slew of different ways. Then we're going to design it, build it, or manage it afterwards. So we'll look at it holistically. So as you think of a project, we want to understand what you're thinking about, what you want to do with it. And we can bring development, we can bring construction, we can bring design, we can bring construction or not, depending on what your needs are. And then, when you look at it and say, okay, well, my goal is to do this. So we'll cater it and say, well, listen, if you're going to hold on to this building for 50 years, you might want to think about upping this, and this, because it's going to be a cost that is going to come back. So don't put in a type of flooring that 10 years later you're going to have to rip out. Maybe you want to look at a 20-year flooring versus a 10-year flooring. And so that's going to affect your income, because let's say you can't go down, or it costs you this much to bring operations off.
Interesting.
And so those are the kind of questions and the team members that we bring to the table and offer. And obviously each offering is different, each client's different. But our goal is to say, hey, what are you interested in doing in the built world? And how do we create a story together? And we try and understand your business as best we can. And then we'll bring whatever services need to happen. And so sometimes that's feeding the community. Sometimes that is, providing healthcare for that community. Sometimes it's housing the community. Sometimes it's helping, bring supplies to our community in the form of distribution. Sometimes it's researching. Sometimes it's educating. So it's a little bit of everything. And
so from like a visionary perspective, full service perspective, almost consulting, all the way down to, maybe you can just get hired like on this other thing here in Lakewood Ranch. This is a multifamily project, development, construction, capital markets. They apparently didn't need or already had an architect that they were working with.
No, so we came to the table and said we really like this piece of land. We felt that we'd be able to deliver the project better with an outside architect who had a lot of expertise in this type of product, or our team was busy, or our team, whatever have you. And so we decided, okay, we're going to develop this. Here's the vision. Worked with our architect to come up with a vision. At that point, we went out and said we'd like a partner to do this with. And so in this particular case, Prudential is our partner. And so we went ahead and closed on the land that we purchased from SMR down in Lakewood Ranch. And we hired a third-party management company to kind of run the leasing of it. So depending on, I really meant it. I was like, when we look at it and say, I don't think that we're going to be great at this. And so we're pretty frank about that and saying, what we are and what aren't good at. And as a result, we can kind of tailor it to whatever it is you need in this one. But yeah, we're the owners on the one on the left. On the one on the right, we found that it was better to work with an outside capital source. And so we brought a group called Harrison Street to the Innovation Center, and they had a public-private partnership fund that they wanted to deploy. And so there's kind of a really cool story at IFF where this was capital that was looking for a sustainable building, and one that was collaborating with education. And so it worked really well for the university system to have a place for innovation to foster, the collaboration with the university. The students were going to essentially become the employees of IFF in the future. So there was kind of that workforce training story, if you will.
Right.
And it was a very niche market. And so we're getting to the point where our education system is top notch, and we've seen that kind of grow really well in the last 10, 15 years, getting into, a lot of people complain about it, saying, I can't get my kid. I went to Florida and I can't get my kid in Florida. I went to Florida State and I can't get my kid into Florida State. Well, companies are noticing that, saying, the caliber of the students getting better. And so as a result, we're attracting some really big players to the market. And that's going to continue.
It's happening. It's been happening for a long time too. I remember in middle school, UF started the campaign. I wouldn't say the campaign. I don't know if it was a dedicated effort on their part, but there was this huge push towards like Florida being the leading educational public school in Florida. I remember there was a kid who went to Plant High School. I think it was in the Tampa Bay Times. This was 20 years ago, but the kid had like a 5.3 GPA and got denied or something like that.
And so it kind of hit the
middle
papers.
Schooler, I was like, what the hell am I going to do? How am I going to be competitive? But yeah, right. That was 20 years ago.
Now it's normal to hear those stories.
Now it's normal, yeah.
Which is great, which means that, the quality of the students coming out is better, right?
It makes me curious to well, first of all, JP Bacariza.
Yep.
Did I nail that?
You did. You got it. You crushed it.
Ryan Companies. And explain your position at Ryan Companies.
Sure. So I'm the market leader for the state of Florida at Ryan Companies, and I lead up our development team across all asset classes. So that's going to be education. It's going to be build-to-suits. It's going to be industrial, multifamily, active adult, healthcare. We're starting to do some aviation projects, and also work with our construction design and real estate management and capital markets teams to make these projects a reality. So,
well, thank you for being here with me today. So this Citrus Innovation Center, first of all, I don't think you could get more niche than that. That is just such an interestingly small market, I would imagine. Scientists that develop their smells specifically towards citrus. Yeah. But what better place than in Central Florida to do something like that?
Of course.
I just saw our governor said something about how NASA should headquarter here in Florida. Yep. And then I see something like this Citrus Innovation Center, and I'm imagining like, gosh, Florida has over 22 or 23 million people. Yep. We just talked about higher education, how there's this huge demand here for higher education. Yep. Citrus Center, all this stuff, maybe NASA one day. The future of Florida, like what industries will emerge here? What different markets will be created in Florida over the next few decades?
So, I'm looking in the glass ball and what am I thinking? But obviously, space and aviation are going to be, key. We're seeing that a lot of the airports around the state have, we'll call them, availability of land adjacent to it. Not a lot of them, but some of them. I think Tampa's tapped out, but for example, Jacksonville has some availability. Miami has on the lesser airports. But we have a workforce that's going to be able to kind of service a lot of that. Whether you came from NASA, whether you were part of the armed forces, a lot of those presences are here locally. And so we're the beneficiaries of seeing some of that.
Yeah, there's a huge, I get DMs and comments all the time about industry, like Austin has this new kind of wave tech scene and all this stuff, and California has their thing, and New York financial, et cetera. What does Florida have? And then Tampa Bay, specifically Central Florida, like what is our future anchor to massive innovation, massive job growth?
Well, the anchor, I think we already have some anchors, and some of the anchors are kind of quiet anchors, right? So financial services, Raymond James down here, Citibank, JP Morgan, they all have major presences here. A bulk of the world's transactions for a lot of those companies are happening out of Tampa, and it's quietly kind of not brought up often, but we're seeing huge footprints from that standpoint. McDill, huge driver down here. USF, look, try and find some bigger universities in USF around the country. There's not very many.
Right.
3 sports teams, phenomenal growth, a great port. You name it, and university systems that are bringing in, companies to kind of partner up. One of the world's best cancer centers, so, you name it, we've got them. And so it's exciting to be, part of that. And once you get kind of a critical mass, that's, if you'll do the Malcolm Gladwell tipping point, I think we're over that tipping point. And I think that we're going to, keep on seeing some phenomenal things until our growth gets in our own way. But I think we got some runway for that.
So you believe that we don't need our Hollywood, Silicon Valley to be successful here or to grow into what we could become?
At the end of the day, we've got a anchor, a single anchor. I don't think we have a single anchor. I think we have, quality of life. I mean, you could look at the anchor and say our anchors are our beaches. Tourism and quality of life is going to bring the talent here, and where it sits doesn't matter anymore. Well, you can make that argument, and here you are.
I think it's a healthier economy to not have one anchor.
Sure.
Actually, well, I think diversity is beautiful when it comes to economics, because if one industry takes a crap, you've got a bunch of others that can make up for it.
So, all right, good example, a metaphor, if you will, TPA. Our airport, I think it's one of the best airports in the country. Easiest one to get in and out of, and you can get to all kinds of places from it. We don't have an anchor, right? And so all of a sudden you look and say, okay, well, I think our airport rocks. I think it does everything it needs to do. And, we're not dependent on if, airline A wants to pull out, or airline B, or what services, or, what they're, what would happen to Hartsfield if Delta went under,
Right.
All of a sudden you got a situation, it's a single company. You're tying your entire future to a company. So I think that's kind of elegant. If you look at, some of the, thriving, booming towns in the 1800s, based on textiles. Well,
Right.
For example, Greenville, South Carolina, we'll say Greenville, South Carolina had to totally remake itself after the textile kind of boom went away. Or what's a coal town do? So I'm a fan of no anchor.
Yeah. Well, look at the entire Rust Belt, right? And then look at Detroit. Look at what's happened to that city over the last 5 decades.
Sure.
Interesting. We started off before we went live. We were talking about the timeline over the last 5 or so years, and really even further than that since the pandemic.
Sure.
There's been so much shift back and forth between a frenzy of a market, almost a roadblock market where nothing, like a stagnant market for about a year and a half-ish.
Yeah, there's some weird stuff in there. Yeah.
You have such a macro perspective on this stuff. Can you give us kind of a timeline of what you've seen in your position? And you arrived here locally in 2013?
Yep. Exactly.
So talk to me about what you're seeing, and then maybe where we're going.
So what was really interesting was I almost call it like a slow ramp up. It felt like, it took us a long time to get out of the Great Recession, and it was, internally, I think the Great Recession was like 2011. We landed a couple projects and said, okay, we're going. And it was, but I would call it a slow ramp up there. It didn't feel like a boom at any point in time. And then COVID hit, and so at that point, I have to say that those first couple months of COVID, I just kind of shifted over into this role that I'm currently in. And, I knew that the role was get out into the community and try and drum up business, recruit the best talent to be developers on the team, but just get out there and spread the word, if you will. And, within a month, we're locked down. I was like, wow, this is really cool. This is, I am in a totally new role. And, my job is to be out there in the community and try and find some great deals. And here I am stuck at home. And, within a week or two, our CEO cut off all discretionary spending company-wide. And I thought, if everybody does this, we got a real problem. So I started putting two and two together, and I'm like, all right, well, this is going to be super interesting. And fortunately, we're diversified in a lot of different buckets. And when one thing's down, something else comes flying back. So while all office projects were kind of put on hold, and you're not going anywhere with that, all of a sudden distribution started moving. And so that has been a wild ride. And just as that distribution started to kind of wane down, and we'll say that 21, 22 period when we started kind of coming back to life, distribution slowed down a little bit, and they'd overbuilt a hair. All of a sudden, the apartment world is thriving. We're fortunate that we overstimulated the economy, and all of a sudden you got a wild inflation ride. A wild inflation ride means that whatever you locked in place today, in the way of land, is going to be grossly undervalued by the time you bring it to market, and so there's a huge spread there that you're going to make as a result of it. And so we are the beneficiaries of a lot of that. And then lo and behold, the Fed realizes that they raise the interest rates, and then all of a sudden it's like you hit brakes on all those things. Fortunately, something else comes in its place. And so we've been really fortunate to, we got 3 major data centers going that have kind of filled the pipeline there. So you get all these kind of weird shifts of the market. And if you're in enough different locations, it balances out.
Yeah.
So for my role, it's nice to see that you can kind of weather those storms and kind of shift resources on the team to be able to kind of hit those peaks and valleys and make sure everything's a little smoother.
And at the same time, a shift in work culture. I mean, there's been work from home for the past 4 years.
Yeah, we're in the process of that kind of shifting the other way. We just went from 3 days to 4, and there's some groups that have just announced they're 5 days a week across the country. And
then you got Elon saying like 0 work from home. No one can work from home anymore. So you have that happening and technology shifting, right? The way people are doing business, e-commerce exploded during that time, which I'm sure is maybe the reason why some of the industrial space, some of the logistical companies have had a really nice time.
Sure.
Especially here in Florida, Central Florida.
Yeah.
So how quick was that shift for you guys? I mean, talk to me about a project or projects you were working on initially, and then the shift through COVID. Sounds like multifamily was big, office was big. Both of those kind of got shut off, but then multifamily quickly popped back up.
Yep.
Office stayed a little stagnant.
I would say office is not well beyond stagnant. So for example, like, you look at, 100 North Tampa is a great example. You cannot build a thing for anywhere near the price it's sold for.
150. Pull that up. That was one of the largest I think that was the largest real estate transaction in Tampa Bay. 100 North. Just put 100 in space Tampa.
I want to say it was 160 million roughly.
Yeah, like 150, 160 million.
Yep.
Which would cost you, like, you tell me. I mean, what would that cost to buy that dirt and build that building today?
Double that, just kind of ballpark.
Just a ballpark.
Yeah.
Just to have fun with that conversation. Call it 300 million.
And then the crazy part about it is if you go in
Atlanta buyer, let's see. Scroll down. Let me just see what they paid real quick. 151.
There. Oh, jeez. And so they were looking at $375 per square foot, and they paid $127 in 2007. So look at that. I mean,
nice return.
Well, over 17 years. Yeah. I mean, I guess if you start factoring in, what the NOI was in there, but I don't know. I
just have a small mind. That's the reason why I said that. 20 million is a lot of money to me.
Yeah,
but
yeah.
I guess when you're making a $120 million bet in 07.
Yeah, and I think what's going on in that market is that people are scared of office, and rightfully so. And as a result, they are offloading their trophy assets, not because they want to sell them, but because they want to get office out of their overall portfolio. So when you want to invest in a REIT, you'd look at it and say, "Ooh, how much office do they have?" And it doesn't matter how the office is performing. So, if you look at it, that building's always performed well. So
how many square feet, David, is this? Scroll down.
It's a big number.
500,000, 572.
Yeah, I think that was a cool buy. I understand, why PGIM did it. I think it was great that they were able to kind of offload it, because some of the stuff you're looking at is, north of 10 caps all across the board, and so you can't really build a 10 cap. So that's a challenge when you say, I want to create a community where office thrives, where you have retail, where you have resi, because I think at the end of the day we all love that, the ability to interact with each other, to be able to go and get whatever you need within walking distance, to be able to do it, and it's ease, right? And there's a lot of ease to it, there's a lot of quality to it, especially if some of the new developments are coming in with that quality component to it. But because you have to bring multiple parties to the table, it becomes tricky.
Yeah, it says that they paid $127 million in 2007, and then it also says that they underwent a $21 million renovation recently. Now, I don't know if that's the new buyer.
No, that was the old one. So that was.
So then that's a real thin little margin right there. If they paid 127 and spent 21, they're making money along the way, but. Yeah, maybe not as exciting as they initially thought.
I think, I love the building. Cool building.
Oh, it's iconic. I love it too. I've always grown up looking at that thing. It was built the year I was born, so that's a cool property. Scroll back up, Tyler. Tyler. I'm surprised I don't say that more. Tyler was with us as our producer from episode 1 to like 85, maybe like 90. So I got that mixed up. Sorry, David. Yeah, David, scroll up. Look at that thing, man.
Yeah, it's a good looking building. Yeah,
super sharp.
Well, and what's interesting is sometimes buildings age and they don't age well. I think this building's aging really well.
I think it's timeless. Really, It's beautiful.
Yeah.
So office, not only did that become stagnant, that really no one wanted to touch that at that time in COVID. And where is office at today?
I would say COVID through today.
Today.
If you look at the average cap rate, I want to say it's 11 and change in Tampa is what the Green Street put out there. So, they're not traded. You don't want to buy one of those at this point. I don't. Well, let me rephrase it. People aren't buying them. I would love to buy this building. I think that when we start mandating 5 days a week, I think that the first time we have a downturn, you can have an employee that's been hanging out at the office and trying to learn. You have those that have been working from home. My preference is, here's someone that's additive to our culture. The other person is a body that's working from home. So I think that when we have a downturn, the first people to go are going to be those that are working from home.
I also believe that urban core has a preference to it and a premium to it. Maybe in the 1970s and 80s and into most recent era, it didn't have. Meaning, and I wasn't born then, you tell me, but a building like this with 500,000 square feet might be looked at as the same as an office park with 500,000 square feet in like 1980. Yeah. Whereas today and moving forward, it seems like this office in an urban core, 500,000 square feet, iconic building, renovation, etc., would be more in demand and a better investment versus, an 8 to 10 acre park out in the suburbs.
Yep. It's funny. You have these. I totally agree with you, and it's funny how we kind of swing from one thing to the other. So what I mean by that is, you remember the conversations when we're like, this is just a dead downtown. And we don't have any life afterwards. Mm-hmm. And then, the folks in the suburb are like, I want office over here. So you always want what you don't have. Right. And what that means is you ultimately want that mixed use component. That's really the bottom line. And so we're starting to see, resi in downtown, which is cool.
Yeah.
Now all of a sudden you got the retail, you got the office, you got the resi. So now you've got that mixed use downtown. That wasn't the case when I got here even 10 years ago. Downtown was dead at night. And that's shifted around. I think Water Street's been a cool contributor to that. I'm excited to see what Daryl does out in Ybor. Right. From that standpoint. And then you've seen the inverse too. You also seen the suburban stuff where they're starting to push some of these kind of niche office space stuff, healthcare, some of those other functions in there as well. So to our point, the comment you were making before was, mixed use is king. And I totally agree. There's a quality of life associated with it. And it's just difficult to capitalize. And so that's why we aren't seeing more of it.
A+ office space seems like there's bets being made in that sector too, right?
Sure.
Like in Water Street, what is that? 1001, right? Water Street. That's been really successful. They're achieving extremely high rents. Ellison is doing an office project in downtown St. Pete, ultra luxe, beautiful, big, nice office. It seems like urban core. What do you call that? Class A office space?
For sure, Class A office.
I was going to say luxury. I don't think that's the
word.
word.
It's Class A. Class A is the right way to describe it, but it's flight to quality is I think what most of the brokers talk about, and so that flight to quality is definitely present, and that quality is usually meaning that you are amenitized. You're amenitized with other uses.
Pull up that Ellison project because I'm pretty sure they're adding some really revolutionary amenities that 10, 15 years ago you would have never expected in an office building.
Like for example, and we've done the same thing. So for example, in our Lakewood Ranch project, we went ahead and put in co-working space. So, to that point of blending it in, we put in, 5-6 offices in there. We put in a whole bunch of booths. We put common work areas, conferences, those kind of things.
Let me just see the amenities on this, and then let's pull up the Lakewood Ranch project. So mixed use development with office components. Scroll down. It's beautiful.
Yeah, nice job.
2.1 acres.
Yeah, Casey's team does, and they do a nice job.
Yeah, great location. So here we go. 12-story office tower, 125,000 square feet, Class A. Represents the first Class A office space construction in downtown St. Pete since the 1980s. What we're going to offer, this is Casey Ellison, what we're going to offer is not only high-end finishes and latest technology, highly amenitized and driven by the lessons we've learned in the hospitality space. Ideal for employers looking to entice their teams to come back to the office. So are you seeing that on your end? Like these companies really focusing on high amenities, big, beautiful office space. Hey, let's get people back to work. Are you seeing a push for this kind of return to work culture?
I would say I'm not seeing. No, I don't see it. Yes, there from the company standpoint, there's the demand there. I haven't seen the bulk of the market going after it. What I would say is your capital source plays a huge piece in that, and so you sometimes get what I would call, there's a real estate developers, and I think there's real estate investors. And I think there's a big distinction between the two. I see this project as a real estate investor, someone who's just as concerned about the return as they are about the quality of the project. I would definitely put Daryl in that category. He does a beautiful job of, and he has an idea of what he wants. I think Water Street is that way too, where they're looking at creating a long-term investment, but that also has something that's not just about the return. It's about the, I'm building a city, I'm building quality for the resident, of St. Pete and Tampa and Ybor. And, is the return there that's meeting market needs? Maybe, maybe not.
But that's not the primary drive.
You're doing this because you love this, not because you're trying to make a buck.
Yeah, Jeff Finnick was on the show and talked about that exactly.
Yep.
The reason he did it was not numbers on a spreadsheet.
Yep.
It's to create a space, to create a certain environment, a certain feel.
Yep.
And in order to do that, maybe the numbers don't align with your traditional real estate developer underwriting, right?
Yeah.
Like he wanted to inject capital, and maybe the answer to some of those questions just look, hey, it's not going to make financial sense. It's worth it to create, like you said, kind of an experience.
Yep. And so if you look at it from, let's say you want to do a mixed use project, if you look at it from the standpoint of, I'm trying to create a wonderful environment, you're always going to go to that mixed use component. If you're trying to get a return, then you're going to have to look at it from a slightly different lens, where you're trying to, bring 3 different capital sources. You're subject to 3 different kind of market trends and demands. And so, if you're partnered up with, we'll call it an investor, real estate investor, and they're sure about the bet, then we can make it work in conjunction with them. But are we going to go out and take the big risk on all 3? We've done it before. We did it, 2 or 3 times in the past, 5 years that I've seen that are pretty effective. But sometimes you just kind of blend it in. So, for example, on our Lakewood Ranch project, what we did is, we did almost a 20,000 square foot clubhouse, just to be able to kind of bring some of those components in there. So some of that social aspect. So our gym is pretty much top notch. We have 4,000 square feet of just gym. We have, roughly that same amount in the co-working space. It's, the idea that you're going to bring, the distinction between where you live, where you work, and where your amenities are. If you blur the whole thing, that just means it's within one development. That is essentially you've created a community. You're not creating a type, a residential place. You're creating a place I can work, I can play, I can live.
And part of what Ryan Companies does is it can gather capital to
Yes.
accomplish whatever goal, this particular.
Sure. I mean, we can do everything from, we can write the check ourselves and be the sole owners of the project. We have had a lot of success with, high net worth raises. And so at that point, it's pretty strong returns for the folks that want to look at, and we have across a whole bunch of different asset classes. So we do have a lot of availability there. We also work with REITs to be able to kind of fund different projects if the check sizes are really large.
Yeah.
But we can kind of look at it from a whole slew of different ways.
And how do the capital markets and the investors, institutions, et cetera, look at some of the stuff we're talking about when it comes to creating experience, creating ultra high quality, right? A real estate investment versus development, like you said. Are they favorable, and are they starting to understand some of the power behind spending 5x on a sidewalk or an art installation or a quality of architecture or whatever?
It's okay to spend 5x on the sidewalk as long as you can get 5x the rent associated with that, or whatever.
So they still
the
want
multiple.
to see, hey, what are we getting for?
I mean, at the end of the day, you got to see value. The value, and I think there is value in high quality products. And so, for example, I do think that Water Street having a high watermark now means that I can make a case for other folks that say, I want to build something at this price point.
Yeah.
And all of a sudden there's a comparable. It's not like you are creating something out of nothing. And so there are times, it's a different thing to say, I'm going to be additive to the overall culture of office space, resi, healthcare, whatever it is, versus I'm going to lead the way. I'm going to be on the, like, you can be on the leading edge. You don't, people don't love the bleeding edge kind of component. And so where you sit on that is kind of a interesting juggling game. And, I think real estate investors are more eager to be on the very, very forefront of things. And sometimes that is phenomenal, and sometimes you overdo it.
It's interesting talking about that, more profit driven development versus long-term holding, maybe more experience driven. It's expressed in so many different developments. Like when you drive down the Interstate 75 and you see the track housing with the sticks and
that's definitely returns.
Right. It's kind of, it's interesting you bring that up. I mean, I don't think I've thought about it from a return perspective like that, but it's so obvious when you see a project and you go, okay, these guys are just trying to make a quick buck. Clearly the quality isn't there. For the community, it's there to make a return. Both are necessary. I just have a feeling, people in general have more of a taste for quality when it comes to the places they live in. Maybe when the suburban era was at its peak, urban environments and office spaces weren't as quality because people just didn't care,
I don't think it was. I think that what we care about changes. And so, for example, the idea that I'm going to have a backyard, the idea that I'm going to have, the suburban office was a result of, congestion, and let's put an office building here where the rooftops are to kind of cut down on the commute. Now we're seeing that demographic shift in Florida, the quality is going up because, quite frankly, the people that are coming have more money. The people that are here have been the beneficiaries of some growth. And so as a result, I think we're just building nicer things to meet the market need.
Let's talk about that capital moving to Florida. We talked before we went live about, everyone knows there's a ton of people moving here, right? That's no secret. You can see it on the highways and in all the demographic data. But the people that are moving here have money. To the tune of, the last statistic I saw, I think it was 2021, Florida had 20,000 and change taxpayers move here with an income of $250,000 or more. The next highest state was Texas at around 5 or 6,000.
Yeah.
Now that was 21. I'm sure it's shifted since then, but it just shows you the people are coming, and the people with money are especially coming here.
Yeah, there's a great IRS data point about that, and I want to say that we're north of $4 million an hour coming to Florida, and so what that translates to is, whoever's showing up here, their W-2 is showing up. So, yeah, I mean,
young and rich Americans are fleeing California and piling into Florida. This was in September 24.
Yep. So not surprising at all. There is a good stat. The Florida Report Card has a good one, dude.
So you were mentioning, it's weird without the headphones. I always wear headphones. You were mentioning before that a lot of what you do and what you look at is data driven.
Yep.
And you mentioned IRS. You mentioned a couple other things. What are the sources? Can you give us a couple things that you're really, really tracking lately?
So I would say there is, you can have a macro look at it, and I think it's important to have a macro and a micro look at everything. So the things that we're tracking on the multifamily space, I think we over-delivered in general in 24. And so this is a great source of data. But if you look at innovation and economic development, that second tab on the top on gray, right? That tab in there, and scroll down here. Where was that number? Keep on going down a little bit. Imports, exports, visitors. There we go. That far right. Income migration right there.
Wow, 4.12 million per hour income migration.
That just makes everyone else. I don't know what Texas is nowadays. They were the closest ones behind us, but they were significantly behind us. And that's ultimately not only the people moving here, but the people who are moving here with money. That's a testament to the quality of the nature that we have, the tax structure that we have, but then also the amenities that are associated with that. And so I think that there's a bright future for a highly amenitized quality of work as a result of the income migration.
You also have an incredible amount of employment by foreign companies, 358,000 employed by foreign companies here in Florida.
Yeah.
It's incredible. 10.9 million. I mean, these numbers are staggering, really. There's really, scroll all the way back up to the top.
Overseas visitors there on the left, number one in the country. So we get the most amount of tourism coming into the state, which is pretty cool.
Technology jobs, fourth in the country. Wow.
Yeah, I mean, you can really geek out on this website. It's phenomenal.
Wow, amazing.
Yeah. For somebody that likes stats. So I guess to answer your question about what do, we go kind of big picture macro trend, because you have to, you inevitably have investors that are kind of coming in. If it's on the multifamily side, I want to see rent growth. I want to see what does the vacancy look like in the overall market, very similar to kind of the industrial space. I saw one stat that was talking about rent growth in Tampa being 10% for the next couple of years on the industrial side, and I was like, wow, 10% that's a bold prediction.
Boy.
But we've got we're tight on space, and
we got a lot of people,
and it's just growing, and we haven't seen a lot of product come to the market, and so it was fairly, when we hit the roadblock, the Fed raises the interest rates. Okay, it's going to be cost a little bit more money to hold. Sellers really haven't discounted anything. The cost of construction has just continued to go up. So it's only natural that vacancy is going to continue to drop and rents are going to continue to go up until that equation works again. And so at a 10% rate, that equation will work no matter what happens in the market.
Sheesh, that's a healthy number to have.
Yeah, that's a great
sure.
number. Yeah.
On the multifamily side, I saw an article. Austin has an oversupply of multifamily. Their rents have dropped.
Yep.
It's actually gotten a little more affordable.
Yep.
Now there's the weird kind of thing where, hey, we all want affordable housing. It'd be nice if rent was a little cheaper for all of us.
Sure.
But those investors are important, and development and growth is important too. How are you seeing that balance out here locally? You mentioned that the industrial side of that's blowing up. Multifamily softened a little bit.
Multifamily softened, and depending on which submarket, I think it's still softening up in some areas. Some areas have caught up. So, for example, our leasing in Lakewood Ranch was slow through October, and then it's kind of the last 3 months have been phenomenal. So I think we're starting to see kind of a bump up in there, which has been pretty positive. And of course, we had the unfortunate tragedy of the hurricanes coming through, and that has displaced a lot of people. And every time you take away supply, that has the impact of driving up pricing for everything else, but then also B, you get a whole bunch of dollars of folks that are coming to repair, and so as a result, we've seen a pretty large blip in that front.
Are you getting questions about hurricanes? Obviously, it's greatly affected the insurance market in the last few years. But are you seeing capital markets come here that are not familiar with Florida, that are whether it's international or from a different state? I mean, there's a lot of different, hedge funds moving here and investing in Florida. Yeah. Have you seen any interesting questions like, hey, is this a problem? Is this like what's happening?
I haven't seen a lot of that. I will say that I've seen insurance drop a little bit, which is kind of nice.
Yeah.
That in the last batch of storms, we'll call it the newer products, have fared well. And so we've seen the insurance numbers go down a hair, which was just phenomenal to see because it's something where it skyrocketed up, came back down. And so you see that roller coaster ride, which is just so interesting.
I think insurance companies are starting to take note, really, really be pointed on elevation and then quality of construction. And hey, what year was this built? Is it blocked? That's the questions I'm getting.
Yeah.
And it's actually pretty favorable. I've got a property that was unbelievably cheap. Like this is a 2000 plus built block construction, not in a flood zone area. And the insurance company wrote me up a policy for like $2,500. And this is like almost 4,000 square foot building.
Okay.
And so, maybe what would have been 3, 4,
I thought you were going to say $2,500 per door. And I was like, oh my gosh. No. Okay. Got it. Yeah.
No,
that's a great number.
I've heard like 18 on multifamily at a certain time.
I did hear. I heard 3,200 was the highest I heard. There was
that doesn't even cover your rent. I mean, that is just crazy.
Well, that's per year, so you're covered a little bit, but
right.
but it's eroding quite a bit. Like, but considering that before that you would have underwritten, it's 650. So just 5x was insane, and that didn't last long, and then that kind of came back around. And I would say that most folks got we're sitting in that 2,000 range or slightly below that, and then we're starting to see that inch down below the 1,500 mark. But and obviously it depends on which subsector of the market you're looking at.
This whole conversation, right? I guess the last 5 years we've talked about all these different factors that are affecting the real estate market. Do you think, is there anything you can point to that has hedged us against a stronger downturn? I mean, it's like insurance really was not in our favor. We were shut down for a little bit. This kind of work from home culture started. Seems like we've hedged COVID and hedged this almost like national. There's been some financial issues in this country. Sure. We've been pretty dang resilient here locally and in Florida. Is there anything you can point that to? I mean, I would assume it's all the capital of people with money moving here. How do you knock that? How do you knock us down, right? When you have so many people moving to a place, tons of high net worth individuals, tons of investment happening. It's like, what kind of could cause us to really fall off a cliff?
I would say that, there's problems that come with that, right? So we're looking at it from the standpoint of, rents are growing, we're building, things are working out. That's coming as a result of, we'll call it higher inflation. And I do think that Florida is subject to higher inflation. You're going to get that inflation anytime that you want, more people are coming in, there's more demand. Mm-hmm. As a result, supply needs to catch up. Till it catches up, we're going to find that prices are going to continue to rise. And so we're the beneficiaries of already being here. And all of a sudden, a whole bunch of people show up and we have assets from that standpoint. So yes, we're the lucky ones that have benefited from that. Where it starts becoming a problem is when that number keeps on trending up, then we start, not being that much cheaper than, we'll say, let's talk LA, for example. The LA market, people are leaving, you'd expect a drop. With the wildfires, I'm super curious to see what's going to happen with the real estate market after they've recovered from that, because all of a sudden you've taken the bulk of the wealth in the town. And if they still want to live in LA, they're going to buy everybody else out.
You have a prediction?
I think it's going to skyrocket. They're going to be about, if you had a B plus house, you're about to 2x what you thought it was worth. That's my prediction. But
In areas not affected, or
in areas not affected. So in other
it.
words, whatever celebrity, A-list celebrity, Paris Hilton's going to come and the house that she wouldn't have looked at before that you were sitting on that was worth $4 million, she's going to pay $8 million for because she just lost her $25 million house and there's really no place to build it.
I agree with you, and I think they're going to bounce back stronger. Yeah. And the reality is they live in a place where it's unbelievably beautiful. I mean, if people listening have not visited Los Angeles, so think of like Tampa. If Tampa had mountains, right? It's like the beach, the mountains, the palm trees, the warm weather. They have everything people want at the end of the day.
I would love to be a concrete subcontractor in LA right about now.
Boy.
So then at that point, I mean, if you're going to spend $25 million, maybe you shouldn't make it out of stick. Just throwing it out there.
There's a thought. Well, interestingly, I think Florida has learned a lot.
Because notice the fireplaces all stayed. Just throwing it out there.
Florida has learned a lot in the past couple decades, 3 decades since Andrew. Andrew changed a lot for us in terms of building code. But you look at, they had a Category 5. What storm was that? I think it was Michael that hit the Panhandle. Yep. I remember going on a road trip, driving across I-10. You look over, still standing because of those building codes. Yeah. So I think it's shown Florida like, hey, look, these building codes work. Like we can build resilient property and live in this incredibly, amazingly tropical environment. And there's a storm every year. And hey, guess what? We can deal with it. I think California is going to realize the same thing.
Sure.
Let's update these fire codes, building codes. Make these properties more resilient.
Yep.
Make sure there's freaking water in the hydrants. How about that? Step 1. But I think you're right. I think they will bounce back. At the end of the day, it's a place people want to live. Detroit didn't have that. Yep. It's a cold environment. It's not that pretty of a landscape.
Yeah.
I think a lot of the resilience of an economy has to do with the demand of that economy at a base level. And when you talk about a state like Florida with 0% income tax, favorable business environment, easy to start a business, etc., beaches, palm trees, and warm weather. So at a core level, no matter what happens here, we're resilient because of those factors.
I guess you could look at it and say, going back to the anchor conversation. What's the anchor in the Tampa Bay area? I think the beautiful beaches and water, and that's hard for that to turn the other way, right?
Right, which is why the environment here is so important to preserve and protect.
Yep.
Agreed. Let's talk. We touched on mixed use. Yep. I thought that was an interesting conversation initially about how, mixed use is great. I think a lot more people, especially in the cities and really even in suburban environments, want mixed use. Even in, what's the little downtown they have in Wesley Chapel? It's this great little place. You go and you park. There's shops, restaurants. It's just cool. And it seems like a lot more people in general, like there's this culture shift towards that. We even spoke about, you lived in Madrid, right? You kind of grew up there in Spain, and you kind of yourself have an appreciation for that.
Of course.
Kind of walkable, nice,
No, of course. It's nothing better than, kind of going down from your, wherever you're living to get a cup of coffee and then walk over and, have a nice meal and shop for something.
But the challenge is for that developer making the numbers work. It's a little bit more thin when you require some of those mixed use components.
If you underwrite a certain volume and you in a perfect environment, you're getting kind of, we'll say, an equal pot of each one of those 3 components. You need the market to be favorable. And what I mean by the market, you need capital to be there. You need the cost of construction to be in line with the rents. And there needs to be a demand for that. And so that's what you look at when you look at any single project, right? You got those, those components, and the deal, we'll call it pencils. Well, when you're doing a mixed use deal, now you need the, let's say it's retail, multi, and, office. You need each one of those 3 to work. And right now, office doesn't work. So then all of a sudden you're like, okay, well, I got to take the office out. What am I going to put it in instead of the office that's working? Okay, medical's still working. Oh, is there a demand for medical? And so all of a sudden you don't need to make 1 deal work. You need to make 3 deals work for the same parcel. Now, there's additive value once you get it over the finish line, and you need to align each one of those. So let's say it takes a year for you to figure out your retail play on this. It takes you a year to figure out your multiplay. Oh, but medical is going to take me a year and a half, 2 years to get the right tenants and fill up a medical, or at least get to that 50% threshold to be able to do the whole medical office building. Okay, well, at that point, I need a 2-year land control instead of 1-year land control. Or you need to buy it with the idea that you're going to, turn that, but there's a higher risk profile when you do that kind of thing.
So a higher risk and a little bit stronger of a negotiation you'll have to have with the seller of whatever particular deal that is to make that work.
Yep.
Our sellers, has that been a shift in the last 3-5 years? And are sellers favorable to understanding that conversation? Like, are you seeing a lot of people say, well, why do you need 2-3 years on due diligence or whatever?
I would say some sellers are, some are. I would say if you get the real estate investor, at which point you have to try and show quality to be able to have them sign off on the mark, and they're going to have kind of a different profile in terms of how much involvement they're going to have. If you have a seller that's trying to maximize their value, they might be a little bit more patient and might be able to parcel it off. So if it's very easy if the seller understands this is my overall vision, you come up with the overall vision, and I'd like to have 3 different closes. At which point you can get cash flow and retire your debt pretty quickly for whoever has that parcel, but then also maximize their return. So if they're a savvy investor, they're willing to do something like that. And then you could look at it from the standpoint of the third one is a little more difficult, where you have to have a patient capital on your side of the table to be able to pull that off. And we're seeing the market. We talked about the office market a little bit. The office market is so bad that you can tear down a 20-year-old office building and put up industrial and it pencils. That's how crazy it is. And so we're seeing some huge valuations on the land because of, there's a fundamental shift in the demand for that type of real estate. A decrease in one end and a demand increase on another. So
20 years old is not that old.
No, it's think about it. This is we've seen 2000 vintage buildings going down for industrial to go up, and
the numbers work.
Wow.
Are you seeing a lot of conversions in office here in Florida or locally?
No, I think that where you have those kind of conversion. I mean, I've seen conversions where like, hey, let's knock down the office building, we'll keep the parking deck.
Right.
That's a conversion of sorts. At the end of the day, when you stop, to think about it, you're like, all right, well, the depth of the office building is not conducive to that kind of thing.
Might as well tear it down and start scratch.
Yeah, because then at that point, you're so far from a window. You have to have a massive kitchen. If you have a massive kitchen dining area, then where are your bedrooms? Then all of a sudden you put bedrooms against the perimeter, and you don't have light in your common area, and that doesn't work. So
it's not like a shark and a cockroach story you told me.
It is not.
So you were telling me before we went live, you went to Cornell, graduated in 2001, and you studied architecture. In the School of Architecture, there's a 5-year program, super intensive, and one of the projects was designing for an animal of sorts?
Each one of the students in the class had to design for a different animal, and you had to essentially build a scaled model and drawings of whatever animal you got. And one of them was a cockroach, the other one was a shark. There are all kinds of unusual animals. You'd mentioned slug, and they would love a slug. That'd be the perfect one, right up their alley. And of course, then you're gonna have to make a model and put it in the microwave to melt it so it looks like wax or something crazy. But it's a weird proposition. But
at the time, you probably thought, "What the hell am I doing this for?" It was probably fun. But now, like with this conversation with office, you kind of are fitting like that question of what do we do with this office building, or hey, could we really purchase this, tear it down, and make the numbers pencil?
Yeah,
you would have never imagined that 10 years ago, right?
No, not at all. And I think what it helped me figure out is, let's say, for example, in the case of CBRE brought us into that IFF deal at Florida Poly, and they came with a very unique user. And so at that point, you need to understand what is it that they're doing. And so I would say that just like that project where it was my unique user is a shark. Okay, well, what does a shark need? That same question is transferable. That same analysis is transferable to what does XYZ investor, XYZ resident, XYZ, what's the market asking for that could really be unique and different, right?
It's fascinating. And back to that kind of citrus scientist smell test. I think that's so interesting. It really, really gets my mind going about what's possible here in Florida, and who knows what new industries will come. It's so cool.
Yeah.
I saw an article too about there's a citrus grove locally. I don't know if you, David, if you want to type in like citrus grove, sale, Tampa Bay. But there's a citrus grove that's been operating for
Eidlitz, 60, right?
Maybe. Yeah,
I think it was Eidlitz. Yeah, I heard about it. I haven't. It's a huge amount of land.
Huge amount of land, and I don't know what that'll turn into. No longer economically viable. So maybe that, I guess, Facebook 10 Tampa Bay looks like they're reporting on it. Major Florida grower to end. Whoa. Misusing features on Facebook. David, what are we doing? Okay. So where is it here? Boy, that's the only article.
Try putting Alico on there and see if anything comes up. ALICO.
Major Florida grower to end citrus operations after years of hurricanes and tree disease.
Yeah,
the Fort
tree
Myers
disease
company
is a major
announced.
Problem. Yeah.
Ashley Moody, shout out, our new senator. Scroll down though. I just want to see the size of the site. So 3,400 acres. They own 53,000 acres across 8 counties in Florida. I mean, this is a massive citrus company. But it's interesting because I saw that article, and then you're telling me there's this new citrus kind of innovation thing, and I'm wondering, like, boy, I wonder if that's this company's issue with hurricanes and disease, something that they can't work towards.
They are looking at ways to try and figure out how to, obviously it's a problem for them too. Anytime that you have a major citrus producing region that now has the greening disease, it's a challenge. Anytime you get a challenge, you got to try and see if you can make. Wow, this is a terrible one, but lemons. Take your lemons and make lemonade out of them. But this is, that company's going to have to figure out, obviously they have a huge asset. What does Tropicana do when you stop producing oranges here? Is there a challenge there? But there is, they have some phenomenal land, and they allude here alternative uses. Yes, you can definitely have some amazing alternative uses.
And there's the link there for alternative uses. I wonder if they've announced what plans would be. I'm sure that they could sell portions of this, partner with a developer, tree grower citrus ones flourish, offering renewable energy and plant-based protein.
And I would imagine this is kind of teed up for, we'll call them horizontal developers that really work, to get and plan out massive communities, and usually look to, we'll call ourselves a vertical developer to kind of help out. And so we've done that with Metro up in Pasco County. Our Lakewood Ranch project was done with SMR that's been developing Lakewood Ranch for decades at this point. So yeah, I would imagine this is perfectly teed up for a horizontal developer to kind of jump in and do some cool stuff.
There's been an unbelievable amount of horizontal development in Florida in my lifetime, 32 years of life. But it's, all the families of citrus farms, cattle farms, agriculture land in Florida, there's a lot of transitioning happen right now.
Yep.
And all these families that have owned these properties for decades, usually comes a time where, hey, your property's worth $100,000 an acre, and you got 1,000 acres. It's
you do the math, and all
very enticing.
Yep.
Yeah, very tempting.
Yeah.
Another thing too, Big Cat Rescue.
Yes, that's right.
Pull that up. Did that transact?
I
or
heard
was that
it did.
Listed?
Yep.
Was that a sale?
We looked at it briefly. But...
Now he's on incognito mode. David over here, Jesus Christ, making us look bad. Okay, Fox 13. Is there a business journal?
Oh, there you go. 7 days, Tampa Bay Times.
Yeah. Big Cat Rescue sells large portion of Hillsborough property for $19.5 million.
Is that thing still operational?
I don't know.
Yeah.
They're still doing
it's funny
Tiger
because,
King over there?
Well, that's a thing that, you're like, all right, well, this is there's a little ding in Tampa when you get, oh my God, that's where the cat rescue was. And so,
yeah, I wonder what they'll name that development. Do you think they'll have some sort of a...
I don't know if you distance yourself from it or you try and,
I think you play on it. T-shirts, hats, logos. Come on, go all the way. So let me just see how big the property is here. I want to say it's sizable. But I don't think I think it's sizable. So 70 acres for 20 million, you know?
Yeah.
That's a pretty dang high price. It was in a great location.
Yeah.
So Big Cat Rescue, 19.5 million. The area will scroll down, David. The area will become something like 280 townhomes. Wow. So a townhome development of some sort. As for the remaining 11 acres on the north end, he said another developer is expected to buy them soon to build 300 apartments. Wow. So so 19.5 million is not the entire property. Yeah. The entire property was much bigger than that. Wow. But this is happening all across the state, right? This transition from these pasture lands, citrus, cattle, et cetera, agriculture to development.
Sure.
So since 2013, have you seen anything interesting in that regard? Because I keep seeing articles and articles. I mean,
at the end of the day, it's the bottom line is it's the highest and best use of a piece of land.
Yeah.
And so, what is that highest and best use? And in this particular case, apartments trumps a cat rescue. So,
boy, I wonder what they paid. I wonder how long they've owned it. Apparently enough to make a deal.
Right? It worked.
You're right though. That's what it does come down to. And if the families are, they're not making money on citrus and cattle, or the grandkids don't want to operate that business, they take the check.
Yep.
But that story. Have you ever read the book A Land Remembered?
I have it on the nightstand to read. But I've heard phenomenal things about it.
A Land Remembered is this story we're talking about right here. It's the story of Florida. I think the story starts off with like the grandson driving a Rolls Royce down the road and reflecting on his past about his family's farm. And then it picks back up in the late 1800s with the Florida crackers and the Florida citrus people. But boy, it's like, I remember when growing up in Florida, you were required to read that book. I don't know what they thought. Maybe they thought for some reason people would have an appreciation for land, agricultural land, and help preserve it. Or I wonder if they just wanted to tell the history, but money talks. And,
sure.
If your 70 acres is worth $20 million and you're trying to pay the bills and you've owned it for 40 years, it's like, how can you tell that person to not take that check?
No, it's hard. It's I guess the investment was that pre-air conditioning being in Florida is takes a hardy person, and some of those hardy people that picked up land way back then are reaping the benefits. Sometimes they're not reaping it, but their future generations definitely do.
I'm gonna call my grandfather pissed after this episode. Why didn't you buy 100,000 acres?
Why didn't we have a farm?
A penny each. Damn it. I want to talk about your collaboration with Feeding Tampa Bay.
Yep.
Really cool project. David, could you pull that up? Probably on your website. I don't know.
Yeah, we have it on the website, but I'm sure
if
you just look in general, it's pretty easy to find. They have such a cool mission. Thomas, who's their leader, does such a nice job of kind of changing the paradigm a little bit and looking at it from a different lens where humanity kind of comes into the picture. And so there's probably some newer stuff. If you go, this is the renderings early on.
Now, does Feeding Tampa Bay come to the Ryan Company, or tell me kind of how that deal worked out? Did you approach them with a vision? They had the vision.
They had the vision. And in this particular case, we just brought our construction team to the table. So it was just our construction team, and that's what Feeding Tampa Bay needed. And they have both the food distribution component, and they provide food for a crazy amount of people in the overall community, but they also have some community outreach functions too. So they can bring in other partners as well as help themselves. So it's just kind of a gem of an institution for helping end food insecurity.
And this is both a distribution center as well as...
Yeah, they have for example, you can walk in there, they have a full-blown, what looks like a grocery store. They just don't charge you on the way out. or I believe you pay what you can, I think is the system they've set up in there. They also have a great organization. They have like, Trinity Cafe does some pretty cool stuff where they are providing meals to folks that need a meal. And the volunteers come in and essentially act like waiters. And one of the cool things that they tell you when you start out is, that you are probably going to be one of the few people that these folks talk to on the entire day. They might be asking for XYZ, or just people ignore them, and so you are make sure that they felt seen. And so that's really cool that it's really just improving the experience, and just giving somebody a little bit of a different take on, just, we're not just giving you a meal. You're going to feel whole and a member of the community when you come here. And so I think that's really elegant.
Well, both the grocery and almost restaurant-esque component is genius to me.
Yeah. Thomas did a phenomenal job there.
Instead of someone
and his team, of course.
Instead of someone in line feeling like they're embarrassed, or they feel a little bit negative about being in line for like to get free food, they get to go to the grocery store and not feel anything like that at all. What a great idea to implement it in that manner. Scroll down, David. How big is this? It's a huge facility.
Yeah, it's
210,000 square foot industrial distribution and office facility. Wow.
Yeah, there's quite a bit to it.
So they serve 10 counties. We served as the design build firm for the project and contributed 25% of the project fee to support the organization's progress in ending hunger in the Tampa Bay area. Wow.
Yeah, no, it's just cool story all around.
So 31,000 square feet cold storage, 11,000 square foot kitchen, daily meals. It's fantastic.
Yeah, no, that's a cool project.
That's probably one you were proud to work on.
Absolutely.
Yeah, that's really cool.
The team did a phenomenal job on that, and just you feel good. At the end of the day, you're trying to create great spaces for people, and sometimes that is you're housing them, sometimes you're feeding them, sometimes you're healing them, sometimes you're educating them, sometimes you're providing a place for them to work. Depends on what it is, but there's so many cool stories to that.
Yeah, 100%.
Yeah.
The last thing I want to talk to you about, you were explaining to me before we went live about structured parking versus what's the other?
So I will put them into 3 tiers. You're gonna have surface parking, you're gonna have precast parking, and then you're gonna have full blown cast in place parking. And so those 3 are gonna have different cost profiles. As you get tighter and tighter on land, you got to go further and further up, and so you get to a point where you need to build essentially under the building, and when you're building under the building, the cost goes 2x from adjacent to the building, and then significantly more than surface parked. So that's why you see that it becomes harder and harder to do core projects when you have the big parking requirements. Now, the parking requirements could be both the jurisdiction as well as just the market demand. We're not in a place where I can live without a car. At this point, public transportation is not at the level that it could be. A lot of different reasons for that. But for example, when you build the exact same building in New York, you don't really need to do that much parking in New York, if at all, because you can get on the subway, because you can get an Uber, you can get a taxi ride, and it's relatively easy to get to it. In Tampa, we're not there yet, so as a result, you have to do this parking component that kind of skews the rents in the wrong way. So it makes it a challenge to build in urban cores when the market is soft. And that means that what I mean by that is anybody that's going to invest in this building, downtown buildings are more expensive. As a result, it's a bigger check size. That check size is less attractive. And then on top of it, we'll call them the boom times, people, I mean, at the end of the day, downtown is downtown. It's going to survive anything. It's going to be the gem of your portfolio if you're a real estate trust. And so, in good times, those are the gems people pick up. In bad times, they go with safer bets, smaller bets, we'll say. And so they tend to go with the outskirts. So as a result, it's harder to make those urban numbers pencil with what we'll traditionally call a trust or anybody that's looking for a return.
So across the country, there's a ton of municipalities that have eliminated parking minimums and parking requirements because, like you said, there's policy, there's code, there's ordinance that dictates parking, but then there's also the market. Even if you have zero parking requirements in a city, the market's going to give you those requirements.
You would have to be very bold to put up a project with zero parking in Tampa.
So what you're saying is the private sector is not building parking because the government is telling them to. They're doing it out of their own.
It depends on the jurisdiction. Some jurisdictions, depends on where it sits. If you tell me that let's say downtown Tampa. If you said downtown Tampa, I want to build, XYZ building, and I want to do it at under one stall per apartment. I would be hesitant, right? If you want to say
downtown, really?
One per apartment? Yeah, I think you need one per apartment at least in downtown Tampa. Now, somebody might, maybe if it's shared with an office building, you can start, some synergy there or something like that. So, for example, if you put let's say a big old apartment next to Fort Brooke downtown, well, okay, that deck is empty at night. That would be a great use adjacent to that. And then you can kind of co-park it, and then you can look at a different parking scenario. If you are a standalone parking structure, the lower you go, the bolder you are, I guess, right? And maybe it works, maybe it doesn't. And we've seen one. There's one downtown that has a lower parking ratio, and the parking's a couple blocks away.
And they're doing bike stalls. I think we're talking about the same.
Yeah, and they have the kind of the movable furniture and all that kind of stuff. So it's a much denser, and that group, great group. I think also a Cornell guy, I'm super eager to see what happens.
What's Cornell's mascot?
We're the big red, but it's a bear.
So a fellow bear is working on.
I don't know if we don't usually call him Bear. I can't remember what his name was, but I think it's just
Go Bears.
Red. Yeah.
But if development like that should go anywhere, it should go in an urban core. And
sure.
And how much of the capital investment is pressuring the developer to make that decision? Can a developer stay strong and have a belief? Look, we only need 0.75 per unit. Is the capital market going to go, we're not going to invest in this unless you do?
That's exactly what they'll do. And at that point, you can either write the check yourself or you can change your design.
So the money actually does.
The money talks.
The money talks and dictates how ambitious a developer can get in regards to some of that stuff.
Yep.
But what do you believe the city government's business is in dictating that if the market sounds like they have it dialed in?
I would say that
knowing that we are not the pioneer, knowing that Minneapolis has done this, there's many municipalities that have eliminated.
Yep. I would say that the municipalities should really just leave it to the market. At the end of the day, if you want to build something that's not market, build it. If you think that you have an exorbitant rent price problem, well, cool, just make entitlements easier. We'll overbuild as developers because that's what we love to do. And then we're going to oversupply. And when you oversupply, rents go down. Simple as that.
There's so much muddy water in regards to development. I think here locally, I hear all the time, like, oh, St. Pete's so easy, or at least easier than it is on this side of the bay. Right now, Tampa's undergoing a land development code rewrite. It'll take a few years. And parking is going to come up. Yep. That conversation is going to be a big one. Yep. How does the city need to require parking if the free market clearly has capital pressure to do the right thing? The developer's taking a risk one way or the other. Yep. There's a lot of money a developer spends on analyzing and asking those questions. So what business would the local codes have in dictating them, or and somewhat arbitrarily? I mean, really,
I would agree. I think they have no business in doing it. They are, if you go with the developer's naturally going to push to less and less parking just to save on cost. That as you pioneer in that front, the market is going to dictate it, and there'll be times, and that market's ever changing. So, my thought process would be that as we move towards more and more automation, as we see self-driving become the norm, At the end of the day, it's very inefficient for you and I to have a vehicle that sits, in the parking lot for, you know, we'll say 23 of the 24 hours a day. So the logic would be, okay, well, if there's something that's going to drive me from point A to point B, public transportation could just be Ubers with no drivers.
Right.
At which point, and the driver's the most expensive part of the equation. And so, yeah, I'm going to get to and from work on this thing. Why do I need parking?
Yeah. Yeah. Joe Lapano was on the show, CEO of the Tampa airport. I think he's on his way out. I think he's like out in a month or so.
What's going to be interesting for him is that, parking's a big portion of his revenue at the airport, right? And so what happens when no people aren't parking, there's Ubering.
Well, what he was saying about certain South America markets was they moved beyond through technology with some of their phone line infrastructure and internet infrastructure. And because Wi-Fi came on the scene after those countries developed, there's not a lot of certain like cell towers and different internet infrastructure. And in the same way, hey, maybe Tampa never gets that light rail because automation explodes in the next few years. And that is our solution for public transportation.
Well, what's, I totally agree with you 100%. And the follow-up of that is, what happens with all those parking decks?
Boy, yeah.
And
well, what were you saying too? Like each parking space is what, 25,000 to build.
25,000 if it's precast, it's going to be almost 2x that if you want to go cast in place. So when you look at some of those buildings and you think, okay, what do I do with? We'll take, since we're looking at 100 North Tampa. What do you do with the 14 floors of parking that has, and they're all sloped?
Yeah, how do you
repurpose a slope
and
thing?
the ceiling is what, 8.5?
Yeah.
And
it's not like I don't know if you can go back in and knock that out, or if that's just going to be
carve that out of the middle in some way. It's certainly load bearing, at least on the pilings, right?
So one of the things that for example, let's look at the airport. So if that happens at the airport, the good part about it is the airport's that's a cast in place structure sitting on top. I guess in theory you just have space. At least the airport's flat, so you can kind of.
At least the airport's flat, right? Yeah. They'll have a lot less of a hard time. I mean, a sloped parking garage, how is that going to get converted? I have a feeling that technology is going to come very quickly.
You think?
You demo it, but how would you demo it if it's the first 15 floors of a 40-story building?
You can't, right?
You can't, yeah.
So and as I think about that, like Miami's full of it.
Oh yeah. Big time.
I would say that we don't have a ton of it here in Tampa. Even in Water Street, it's the bulk of it's, I think, an attached deck, right? So that's going to be easier to repurpose, and I think that was a smart move.
So on several episodes, I don't know if Venick and I talked about it, but on several episodes, the reason they did that was forecasting some of this automation.
Yeah.
Hey, if we're going to need to build parking, let's build it in one building. That way you can take the building down and build another skyscraper if need be.
Have you seen, we did a building for Kroger in Groveland. That is kind of the hub of the distribution for all those trucks that you see kind of going around town. And what they have on top of, they have something called the Hive, and it's basically crates on crates on crates with groceries in them. And then they have 1,000 robots that pick your groceries and put it into the truck, essentially.
I have not seen that. David, pull that up. Very interesting.
It's pretty cool. Just Kroger, Ocado. Kroger. Yeah.
Kroger.
And then OCADO.
And this is for distribution?
This is distribution. So once you pull it up, you'll see kind of a cool, just click on the first link there. Either one. I'm sure they're about the same thing. There's one that has a video in it, which the video is always cool.
Kroger to add new Ocado technology to automated fulfillment centers. Huh.
Yeah, and so let's see if they have any. Go back to the first link. It's probably better. There we go. Yeah.
So Ocado Group, this is a technology company.
Yep.
Partnering with Kroger.
Yeah. That's essentially what they're doing.
So you have created this, and where is this located?
This is in Groveland, so just right outside. There we go. That's what you want to look at. So the groceries were sitting in these bins.
Where's Groveland?
Right next to Lakeland.
Oh.
So just down the street. So they are.
What?
Yeah, it's pretty wild. It's so cool.
So Florida now has this. Very interesting. It's been, how many of these are in Florida?
Just one.
So this was the first of its kind.
Yeah.
I would assume the state was very interested to see something like this.
Well, what's interesting about it is, you can basically hit a much broader base from a single facility. So now all of a sudden, that their goal is that eventually someone's going to be able to just put the groceries in your fridge for you, and you don't have to do a thing, because it's gonna be like think of this as the modern day milkman, where it's a little hard to create a bit. Well, and they did it to deliver just milk to your house, right? Think about it. You're gonna spend, let's say, $10 a week. Well, $10 to $20 a week on milk. It's a lot different when you're going to spend $150 a week in groceries. So all of a sudden, it takes that same model, obviously creating.
Whoa!
Yeah, it's wild. They have
the online supermarket.
They have 1,000 robots moving around. It's so cool.
Now, what you have built is different. What you've built is a logistics center.
No, that's that. So it's basically a center that has that inside it.
And Kroger's the grocer that
is distributing everything. So when you order a Kroger grocery, let's say you go online and you order, one of those little robots is picking your groceries up and putting them into the truck.
Whoa.
Isn't that cool?
And do they service what? Tampa Bay?
They from that facility, they can do all of Central Florida.
Whoa, from one facility.
It's bananas.
So they can service millions of people.
Yeah.
From one centralized facility.
From one facility.
And it's in Groveland, which is like near Lakeland.
Yep. So it's pretty wild.
Yeah. Whoa. How did I not know about this? When was this completed?
We did it 2 years ago, 3 years ago.
Fantastic. David, can you look up Groveland, Ocado? So I can see.
It's going to be Groveland Kroger.
Okay.
So it's a partnership between the two companies.
Got it.
So what happened is Ocado has the system. Kroger is their sole. There you go.
I'm surprised. Well, maybe there was some sort of negotiations at play with Publix, but I'm just surprised Publix wasn't really all over this. But I don't know.
That's.
Let me take a guess. Publix already has an incredible footprint. Kroger doesn't. This is Kroger's quick way to get saturation.
In general, I would think you'd want to avoid being in markets that you already have a grocery store, because it could cannibalize some of your sales.
Right. Kroger may not have physical. Wait, right there was perfect. That's exactly what I was saying. Yeah. Scroll down. Kroger may not have physical grocery stores in Florida like Publix, but they do have a massive fulfillment center that's allowing them to do on the demand delivery in and around Orlando. Yeah. Lake County, 375,000
That's a big building, very tall too.
Very tall.
Yeah, because you got to be able to get that nest in there. So it's kind of interesting. Yeah. If you look at that image, though, those things are pretty deep.
Holy smokes. This is wild.
Yeah, it's a cool system. They're definitely kind of pioneering the future there. So yeah, that's the building we built.
So that's it. And it's 5 stories or so tall, something like that?
4? It depends on where you're looking at it. There's 2 stories of office in there, and then there's a lot inside.
So all the Kroger trucks I'm seeing, those little small trucks, those come from that facility.
Yep.
Whoa. And the whole thing's probably cold storage.
They have certain parts. So this actually, there you go. This is it right there.
Oh my God. This is
so
unbelievable.
Cool. It's amazing. You keep on looking. It's mesmerizing because you look at that and you
go on the Kroger website. You put things into your cart. You check out.
You can put in, I want 1 banana, and it'll show up with 1 banana.
There's no minimum? Oh
no.
My God.
Yeah. It's cool.
Look at this.
And you're looking at that and you're like, they're going to hit each other, and they never hit each other. But you always you're waiting for that one to hit each other. They're flying past each other. It's so cool.
Absolutely fascinating. And the fact that this is the only one in Florida and you guys were a part of it, I'm sure is really exciting.
It's really cool to be. That's what I love about this job. You the one day you're looking at this, the next you're looking at someone's home, the next day you're looking at how to do
feeding Tampa Bay.
It's just cool. Some days we're thinking about how what's something going to smell like.
And I did see people working, so it's this does.
Oh no, there's a lot of jobs.
Level of jobs.
I want to say they have 400 to 500 people is the number I've kind of heard off. So there's a lot amount of jobs to it. No, it's we're just evolving. We're just becoming more and more efficient with the way that we operate as a civilization. And so, sometimes that means it's a something like this. Sometimes it's automated vehicles. Sometimes it's AI that's doing things. And it's just it's a cool time to be alive and working in the real estate space, because the real estate space has to house everything that's going through there, and you have to figure out, what's the new puzzle today.
All of that, and here in the now and locally. And I think the whole conversation today just about Florida and Tampa Bay, I'm so optimistic about our market. And to be alive and in the here and the now
it's just cool.
Is incredible.
Yep.
Let's end all that. JP, thank you so much.
Garrett,
this was
real
a lot
pleasure.
Of fun.
Yep.
Beautiful. All right. Thank you, everyone. See you next week. Hey guys, if you want to watch episodes just like this one, make sure to click right here to view the rest of our full episodes. And also make sure to subscribe by clicking right here. Thank you for watching.